Hello, everyone. Welcome to the stock specific class here for Thursday, April the 28th. We're dealing with before we get started, if you have any questions during the week or any questions I don't get to in class, make sure you send those to jerry@traderspro.com. We're dealing with again, a pretty bad whipsawing market. It seems kind of all over the place, and that's why it's really important that you analyze the trend. What is the trend that we're in? Because it keeps you from getting caught in that yo-yo effect of the whipsawing condition. If the market is acting like it wants to go up, then it should eventually go up out of those whipsawing conditions. If it looks like it wants to go down, it should continue to go down out of those whipsawing conditions. I think what's significant about today is that it makes sense that we're rallying a little bit today, because if you look at some of these indicators, we're reaching some extreme levels, and when you reach those extreme levels, it doesn't mean that the trend's going to turn around, but it can mean that you can bounce, or you can get that little bit of that whipsaw. First thing to point out, though, is again, we're starting to see that bull market indicator move lower. I talked about this. We had been at these record high levels. We'd never seen levels that high, bull market readings that high based on the algorithm. So that's why it took a while for the market selling off before we finally hit the area. We're finally starting to see that needle come down. And it'll move very quickly now if we do get another move to the downside. And so we'll watch for that. We'll see if that takes place. But it also goes to show you what I've been saying all along, which is, all those people that believe that those February, March lows were the bottom of the market, and we're just going to rally up from there. We're not even out of a bull market yet, according to this indicator. Now, again, it was extreme, but that means that it probably needs to be extreme to the downside. When you have an unusual move up, you're probably going to correct more violently to the downside before it's done. I'm not saying we had to come all the way back down to the 2020 lows or something like that, wipe out the entire move that we rallied from. But as I'll show you when we get to the chart, we haven't even corrected 50% of the move. And most corrections are at least 50%, sometimes a little bit more than that. And with all the stuff going on and what's ahead of us with inflation and the Fed has only raised interest rates a small portion compared to what they need to. I just can't see. Obviously, the chart is the most important, and I go with what the chart is saying, but I can't see a reason for the market to rally. But again, that could change, and what it would cause it to change for me is, again, to get that flush out sell-off that freaks everyone out and gets us to a level where we're more apt to be able to correct. Well, actually, you can see right here, just on this long-term chart, here's the 2020 low. Here's that big move up. We're barely at a third of that move. 50% of that move is probably down around here. So it makes sense. It makes a lot more sense if this is wave A, this attempted rally. This was the lows of February, March, and then this bounce right here is this wave B. This is what I've been talking about all along. And that we're going to get this wave C that brings us down probably closer to that 50% retracement level, and again, this has all the makings of a suckers rally, which is what a wave B is. It sucks you in. It makes you think that wave B always makes you think that wave A was the bottom. It sucks you back into things, and then you get that wave C. That's why we look for these patterns. That's why you have to understand trends. You have to understand trend behavior. How do corrections take place? When you get the initial sell-off, everyone thinks that's the end of it. They buy back in. They're eager to buy back in. They're still confident to buy back in. but they're buying in on that suckers rally. They get flushed out, and now down here they're afraid to buy in, but that's when they should be buying in, because that's usually where the bottom is, and you start the new uptrend. Well, I tell you, the value of Elliott wave is to me is not in the wave counts, although the wave counts can be very helpful, and understanding the waves and how trends move is very important. But there's a lot of people who get so caught up on Elliott wave, they try to believe Elliott wave can predict everything, and they get fanatical about it. I've believe me, I've been around some of these fanatics, and they believe that they can know exactly what's going to happen next, and that everything can be explained, and that just hasn't been my experience. But there is value in understanding the psychology of why do markets correct the way they do? Why, what does a bottom feel like? What does a top feel like? What is all these little things you're never going to base your entire trade on it, but they can be very valuable in analyzing what you are currently seeing and all the different things all the different clues that you're adding up to determine what should happen next. And I get it. I've had people email me, and when I called a sell-off before it happens, and how did you do that? And that's incredible. But I don't get the emails when I'm wrong, so it's distorted because but that's what makes people feel like they can predict things, is that they only focus on the times when they're right. And Elliott wave is not going to be able to tell you perfectly what's going to happen next, but it can enhance your ability to recognize things that other people aren't recognizing, that some of the average traders aren't seeing. And it helps you be less part of the trading crowd at times. We're still all part of the trading crowd, and we're still all going to make human nature mistakes. But it cuts down on those, and it gives you that edge. Sorry, I didn't mean to get off on that little rant there. But for those of you that haven't put any study into Elliott wave, I would encourage you to do so. Just don't become a fanatic of it. I have trainings on it in the YouTube channel. If you go to YouTube, the Traders Pro YouTube channel, and look for the Elliott wave trainings, I've got some videos on there for that. The videos are that I do the market update or the stock specific class first, and then I do the training after. So you have to kind of fast forward through the video a little bit. To usually about a half hour in or so is when I usually would get to the trainings on those. Momentum, though, again, this is signaling a bounce. We're at the far left side of that extreme reversal risk range. Doesn't mean the market's going to go into an uptrend from here, but it does signal that it could bounce a little bit, and we are bouncing today. We should see this back off a little bit, maybe for a day or two, and then we might get a much bigger sell-off. I'll point out what I'm looking at on the chart here in just a second, but that's signaling a bounce right there. Now breadth isn't. Breadth is lagging, which means there hasn't been a lot of participation in the selling. It's been pretty sporadic with a few of the stocks. In this case, a lot of the big cap tech stocks are moving things down, but there's a lot of the small caps that have already been beat up. They're not moving down much lower than where they are now. We could get, if we get that flush out sell off, they're likely to have another move lower as well. But breadth is lagging just a little bit, and then sentiment again. We moved off the extreme range. I don't expect sentiment to get necessarily into the fear area. It could move. It'll move into this area very quickly when that panic kicks in. But we still have elevated levels of complacency. But there again, this is why we haven't bottomed yet, because you can't have that whole sell-off that we just had and never get out of the complacency range. There was never any fear in the selling. We got to get at least closer to that. I'm not saying we have to get into the fear range, but at least get to the left side of that trending box to show that there's at least a little bit of concern behind the selling. We flip over to the buy-sell ratios. They're pretty wide. Now, remember, these update overnight, so this is reflecting as of the close yesterday. it's not factoring in the rallies today. So we should see the sells come down, buys come up a little bit, but we are at extreme or pretty wide right here. It's pretty extreme level right here. So we're due for a little bit of a rally or a little bit of a bounce at these levels. Now they can become even more extreme, but this is an area where you would expect to see maybe a little bit of a bounce. And then this sentiment indicator is down at the buy side down here. In fact, it's a little bit, but it can get a little bit further below it. But it's showing that we could rally we could have a decent rally here if the market decided to do that. So we are seeing some of that oversold, some of the oversold signals in the market. Now, let's get to the charts. And, it's important that this is why we go through this whole process, because, I've been so focused on this next move down, especially when the market's been kind of whipsawing all over the place and couldn't really rally, that it's easy for me to believe that every move, every rally is going to end up going lower, and we're definitely going lower. I can start to get so focused on that expectation that I could ignore what the clues are. Now, going through just that part of the analysis, the clues are saying, hey, we've already sold off a little bit here. We could rally for a few days, and so I've got to be aware of that. Because if I'm looking at a situation to be bearish on the market, to trade the market lower, this is probably not the area to be shorting stocks or buying put options in a big way, because we could rally for a few days off of this. So I need to make sure that I'm not getting so focused on what I believe is going to happen that I ignore some of these signals. Now, again, I'm pretty flexible. I'm trying to gather all the information first and then kind of determine what I think is going to happen. Now, if I look at the chart here, we're at a very, very critical area here. But I can see why some of those indicators are showing a possibility of a bounce. Where, this is what I've been telling you to watch all week. Again, for those that are brand new, we had a day right here where we gapped down. We closed right here. We gapped all the way down here at the open, and then immediately we moved up. Before you could even make a trade, we moved up. So that told me there were buyers right in this area here. We pulled back to that same point here. Buyers, they didn't push it up very much, but they pushed it up a day right there. It came back and tested it again, and then we went on this big long run right here. On the way back down, all these people that got in here pretty aggressively are now starting to turn into losses, and it becomes a matter of how much loss are they going to take. Now, looks like a lot of them sold out through here, but then you see we're bouncing right in this area right here. Whoever these buyers are down here they're the ones that are holding the market up. And they're the ones that are standing between the market bottoming here and rallying all the way back up and collapsing. In my opinion, that's what I'm seeing on the chart. And I believe if we break this level, that we're going to see that panic, that really panic selling kick in, and so you can see why. Now, I also have a trend line, drawn a trend line in through here. And this marks the bounce. Obviously, some buyers pushed the market up right here. Some sellers sold off right here. Remember, that was on that first bounce right here, and then it sold off again. A little bit of resistance through there. There's also a support area back here a little bit further, which you can go look at later on. I've gone through it a number of times, and you can see if you go to a longer term chart. I just don't want to take that extra step to do that, but it's there. There's another support area there. So I'm curious to see how we react in this area right here. Now, you can see what a whipsaw day today was. We opened up, so here's where we closed down here. Well, look at the last couple of days. Actually, look at the whole week. So here was Monday. We should have gone higher on Monday off of this bullish reversal candle. In fact, I'll trade those all day long because you're almost always going to get some move higher the next day. But it did. It gapped down the next day and then had this ugly day where it came all the way down to this critical low. I was wondering at that point, are we going to break through this and just collapse right there? Or are we going to bounce a little bit? Now, I felt like we still had a opportunity to bounce this week just because of all the tech earnings coming in. But if they would have all been terrible or bad, you could see where that could be the trigger that causes everyone to sell. But yesterday, again, we gapped up a little bit at the open, traded all the way up here. It looked like we were going to have a bullish inside day candlestick formation, and then we faded all the way down into the. Actually, I think we opened and we dropped first. If I dropped first, tested that low, and then rallied all the way up. Looked like we are going to have a bullish inside day, and then we came all the way back to where we opened, all the way back to where the market opened right there. Today, we gapped up pretty significantly, and then we came all the way down to where we closed yesterday. And then now we're roaring all the way back up. And it looks like we're right at the highs of the day. Now, again, what I'll be looking for into the close is, do we fade off of that? Do we do what happened yesterday where we come all the way back down to the close? Do we come all the way back down to this level and close right here? I don't have any confidence that any of these moves are going to hold up, which is why typically when you see the market whipsawing like this, you want to just, if you're a shorter term trader, you just want to stay out of it. If you're a day trader, you're probably trading those swings and doing all right with that approach. You're looking at intraday charts and all that kind of stuff. But this is what I was talking about. When you get whipsaw like this, you want to pay attention to what is the larger trend. We've already been trending down. There's a lower high. Here's the lower low. And so here's a key support level, but the trend has clearly been down. And so we would expect that after this whipsawing is done, we should have another move down. We should continue to move in that direction. Now, what I'm interested to see tomorrow is we got Apple and Amazon reporting earnings. That's going to be the biggest focus of the week on those two huge stocks. And the thing is that if they're terrible, if they're disappointing earnings, then I can see the market starting to drop in a big way tomorrow, because there's really not much to look forward to after this. Well, you got a couple things next week. You've got the big companies have pretty much reported earnings. We pretty much have a good idea what the earnings scene is looking like, right? We've got the end of April. Typically, April tends to be more of a bullish month, and usually May is a bearish month. You might have heard the Wall Street phrase "sell in May and go away." It's usually, the market usually has its strongest moves between October and April, the end of April, and then May it tends to sell off and be kind of quiet through the summer months. Although don't get too caught up in seasonality, because you can have strong rallies in the summer, and we've had market drop from the beginning of the year for the most part. We've been dropping. So if the earnings are good, I can see us gapping up again. But then what I'd look for is, do we get a gap up and then some sort of reversal? Because again, what's going to feed it after that? We also have a Fed that's already behind. So we know at the next Fed meeting, they're probably going to be raising rates at a much more aggressive pace. That's not going to be good for the market, even though the market is already kind of anticipating that. We're going to start seeing the effects of it. It's going to be slowing down the economy, and that's not going to be good. Like I said, we haven't shown that expectation yet in the charts. We haven't corrected enough to show that yet. Could I be wrong? Could we not? Could this not? Could this be? Could we rally all the way back up to here? I've talked about a number of times that we could. This could be wave A. Maybe this is wave B right here, and then we get wave C. I've got to recognize that as a possibility. And with the market showing some of those near-term oversold conditions. Now, by the way, you can still have oversold conditions and then get a massive flush out sell-off that puts you even more oversold. But I've got to recognize, let me draw these lines in here again real quick. I got to recognize that we could rally up a little bit. Now, where I talked about this, I think on Tuesday, but where is the area that it's more likely that the market is going to have a little bit larger rally? I think right in through here. This gets back to an Elliott wave rule. If this is wave 1, wave 2, and this is wave 3, and this is a bounce for wave 4, which I think it could very well be, that leads to another move down, it should reverse and go lower anywhere in this area right through here. If we rally up above this level right here, it breaks an Elliott wave rule, which is that wave 4 should never trade into the territory of wave 1. So if this is wave 1 and if this is wave 4 can't trade in the territory of wave 1. So if it does get up in here, this is not a wave 4. Now, first question I'll ask, if it's not a wave 4, is what else could it be? And there are other possibilities there. Some of them, kind of lower probability expectations. But at that point, especially if we go straight up into that, you've got to assume that we're probably going to work our way up to, maybe not a straight line like this, but we're probably going to work our way back up into here. And the expectation of that bigger sell-off is going to be pushed out into the summer a little bit, probably for me, or like the end of May or something like that. So again, we'll pay attention to that. So the key areas that you want to be watching for the next several days are these areas right here. And you could throw this one in right here just to see if you start to see a bearish reversal candle anywhere. You see a bearish reversal candle anywhere in this area, that's probably signaling the next move down, or has a strong possibility of being the next move down. Now, corrections, if this is a correction for another move down, they tend to be ABC patterns. So this might just be wave A. Maybe we drop a little bit tomorrow and it's just wave B, and then we get wave C, and then we drop. But you don't always have to have that. But here you kind of got it. You had a little bit of a bounce right here, and a drop back down, then a move back up, and then you got this strong sell-off here. But this is what I'm talking about. We got a signal for that. We got this corrective move, and then we got this bearish reversal. We got two of them, one right here, and then this one kind of confirmed it. And again, it looks, when I'm talking about these things, it can look like we're perfectly predicting, but it's just understanding trend behavior. When you understanding that stair step, stocks will tend to alternate between impulsive and corrective moves. When you're in an uptrend, you get impulsive, corrective, impulsive, corrective. Impulsive is like you're stair stepping up. When you're in a downtrend, you get impulsive down, corrective, impulsive down, corrective. You're stair stepping down. Well, you had impulsive down, and then you had corrective. You were moving sideways. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. Keeping in mind the words more likely doesn't mean it has to or it will. And when it's done moving sideways. We don't always know when it's going to be done moving sideways, but when it does stop moving sideways, it should make that next move down. Now, does it always work? No. In fact, I could point to this right here as an example. Here was an impulsive move up. Here was more choppy, more corrective. I would have expected that we would have continued to move higher there. It dropped. So that's why that's just one of the things that we're analyzing. We want to bring everything into our analysis as much as we can. And by the way, those of you who've been with me for a while, I go through, it seems like I'm going through the same things over and over, and it can get kind of boring. Those of you that are brand new, it's a little overwhelming. I'm talking about all these different things that we're looking at. But what I'm trying to teach you is this is a routine. This is something that I do every day. I want to know every day what the clues are. What is the most likely direction of the market? And remember, some days I don't know where it's going. I don't know. It's not giving me strong enough clues for me to be confident in a direction. Or maybe the direction it's been moving side. Look at the Russell 2000 all of last year. It was in a sideways range. That was the trend. It was sideways. It would do me no good to assume that the trend was up or the trend was down when it wasn't acting that way. I've got to be honest with the way it's acting. But we want to go through these things and to learn these clues. Now, that's the benefit of going through the classes each week, is that you get that repetition. You see me start with the direction alerts. What are they telling us? What are the buy-sell ratios telling us? What are the charts telling us? All the index charts, everything. Get that routine down and start trying to just focus on, maybe all you could do is focus on learning the direction alert, reading the direction alerts, and focus on that for a couple of weeks to get that down pretty well. And then, like I said, this chart stuff, over time, you're going to be able to do all this stuff yourself if you keep working at it. And I would encourage you to maybe do your own analysis before we do these classes, and then compare it to what I say in the class. That's a good way to know if you're reading it. And I got to be careful. That's assuming that I'm always right and that I'm reading, and my way of reading it is the way to read it. You can't ever disagree with me. I don't want to imply that. But a lot of this, as far as trend analysis, there's a lot of it that you talk to almost any trend person, and we're all going to be pretty much on the same page because these are all clues that we all learn to analyze. They're pretty universal for the most part. There could be other areas that we could have disagreements. But if you do that before class, then you can kind of compare with what you're seeing with what I'm seeing and see if you're on the right track with that stuff. All right, so those are the key areas on the SPY. Again, a couple of things here significant. The Dow is not even down to that reversal area, and it didn't have two touches here. It had a higher low here, but it hasn't really reflected. It hasn't come down like the other indexes have. So, maybe that you see if maybe the Dow starts having bigger down days percentage-wise than the other indexes. That might be a sign that we're starting to move lower. It might start to lead the way lower. The Qs are right at the bottom there. They are right at the bottom. In fact, they've gone a little bit below it yesterday. We are bouncing off of the area though. But I think it's significant that we've gone below, we have traded below these lows right here. It started to freak these people out a little bit. And then the Russell 2000 did go below those lows. And closed below it yesterday. We are bouncing a little bit today, but not very much. It's lagging the other indexes. So we'll see. So we're seeing kind of the cracking of the support area. 2 out of the 4 indexes are below it. One of them is right at it, that critical area on the S&P, and the Dow is up a little bit further. But I think the S&P is the main one because that's what most everyone looks at. Is when that breaks it, I think that's when that panic will really kick in. Now you can see that the Russell is, in that extreme reversal risk. We're getting towards the right side of it. We're not quite at the extreme level where you're at the far left side of it. But this is also an area where we can bounce a little bit, and we probably will. Like I said, these things all update overnight, so we'll see them probably move a little bit to the right. The Q's just entering in the extreme reversal risk. The Dow is actually in that extreme reversal risk as well, but not to the far right side. S&P's in there as well, but again, not to the far left side of the box there. All right, real quickly, let's go. TLT continued. Looked like it's continued to move down. We talked about this on Tuesdays. That was probably just a bounce. And we're likely headed lower. It looks like we're starting to head lower there. Gold. Now, gold is looking like it might be completing an ABC pattern. This being kind of wave A. Again, notice that we rally. This is kind of the suckers rally up through here. Wave B, we've come lower now. Looks like this is maybe wave C. Now, wave C could come down even lower, but we start looking at an area here where maybe it starts to rally up. If you see a decent rally where it looks like it's taken off again, you could trade that if you wanted to. Although I talked about maybe trading the gold miners, the GDX is maybe a better way to trade because they're making a lot of money right now. But it would make sense that gold would go on a run here pretty soon because we're likely to see even higher inflation numbers coming out, and gold tends to be a hedge against inflation. Although I really would have been expecting a much bigger gold rally than we've seen based off of some of these. Really the sharpness of the inflation numbers that we've seen so far. But I'm not going to trade gold because I have such bad luck with trading commodities that I got kind of soured by it. But that's why we go through this. Is those of you that do like to trade the stuff, that can hear my analysis on it. Then the dollar, oil. We put on an oil trade here. I believe that oil is going to break this little triangle thing to the upside. Maybe not, but I'm assuming that oil is going to continue to move higher. That's why I believe I got into the USO trade on Tuesday. I'll have to double check that, but I thought I did. I'll check the portfolio here in just a second. The dollar has really moved up sharply, and this is an area where we should start to see either a move sideways or a pullback. We are at the far right side of that extreme reversal risk, so this is extremely overbought. We got a little indecision candle today, but we got an indecision candle yesterday too, and it went higher. There's an indecision candle there, and it went higher. So it hasn't shown us a bearish reversal yet. But what I would look for is, maybe a gap up and then closing lower than where it opened on decent volume. Higher than normal volume would be maybe a signal that it could, but it could just be a quick one here. It pulled back really quick and then took off again. The dollar's just been really strong right now, but the trend is clearly up. Yeah, and until that changes, you're going to assume that trend is going to continue in that direction. But again, you don't want to be buying anything related to the dollar right here because it's so extreme that the risk is that it could start to pull back right here or move sideways. Which is why I wouldn't be shorting it, because it doesn't mean it's got to come down. It could just move sideways to alleviate that overbought condition. The VIX has come down quite a bit today, so this is fueling the possibility that we could rally for a couple more days. Is having the VIX come down quite a bit. Remember, this is not the VIX indicator, but this is the ETF that we can track the VIX. But the VIX itself moved above 30. So it is in that range where the market is kind of freaking out a little bit. To really see panic in this market, I think we got to see the VIX get above 40. And if you are looking at the VIX, if you got another charting service where you could look at the VIX indicator itself, we haven't, with the sell-off that happened in February or January and or was it January, February? January and February in that area there, and then again in March. The VIX did not go above like 37 or something like that, somewhere in that range. So if we're talking the market those lows, we've got to expect the VIX to go above those highs back earlier in the year. So that's why I think we got to at least get up to 40 or above to really feel like there's panic in the market, panic in the selling. So that's something. And you know, on the VXY again, you could just use these. We got to get up above here likely to really get to fear in the market, or panic in the market would be another. I mean, there could be some fear. There's probably a little bit of fear in these areas, but not the panic that you look for at a bottom. Chip stocks, again, these have broken below those lows, or well below those lows. Chip stocks tend to be a leading indicator for the NASDAQ 100. We are bouncing a little bit today with everything else, but if it's a leading indicator, then it would be telling me that the NASDAQ needs to be breaking clearly below these lows as well. And it's just starting to, or barely there. We'll see if it continues to move in that direction. But you know, watch, see if these chip stocks can get above this area right here, that kind of support area right there. See if it gets back above that. It'll be interesting. And the big thing is see how things close there. If we're closing near the highs, we should get another move up tomorrow. But again, you have the uncertainty of these earning announcements, so you just never know. That's a lot of why I think we had a lot of whipsawing this week. Earnings are so unpredictable, and you get conflicting earnings reports. You have Google bad, Microsoft good, you know, Facebook good. I'm trying to think of what else was bad, but you know, you get kind of, it's just back and forth. Netflix was bad. All right. Transports as well. They're having a nice little rally here too. It'll be interesting to see if this is maybe wave A, wave B. Maybe let's rally a couple more days up here for wave C, and then it heads lower. This tends to be a leading indicator of the Dow. Remember, the Dow has been lagging the decline too. So, you know, but we did see transports take out that low. I would expect that the Dow would eventually get down below them. Remember that these indicators these aren't immediate indicators here. It doesn't mean they have to immediately make those lows. It just usually means that they'll head in that direction at some point. Bitcoin, you know, Bitcoin's in the sideways range. You just draw a line up here. There's your resistance. Here's your support. We're right in the middle of that. If we break above here, that's bullish. If we break down below here, that's bearish. Right now, we're in a sideways trend. You just have to call it what it is right now until it breaks in a direction. But that's where we would change our outlook from sideways to a direction. If it breaks above here, it's more bullish. Breaks below here, it's more bearish. Not really a trade there, in my opinion. I wouldn't want to be jumping into any Bitcoin trade right now based on that. All right. So let's sum up the analysis. We're definitely in a market where we could bounce. There's a lot of indicators are showing some oversold conditions. Trend is still down. There's still a lot of expectation that we're going to move lower. Let's continue to build our watch list. You know, if we want to be in bullish trades, let's focus on, you know, oil stocks, although some of those have been beaten up a little bit lately. But those are the trends that have been working until they don't. But you want to focus on those stocks that are outperforming the market. Aerospace, and we'll look at individual stocks here to see if some of those are outperforming, and it doesn't mean we have to jump in them, but we want to make sure we have a good watch list that we can follow and be ready for when it does when it does start to show more of a bullish move. I did get out of the let's go to the portfolio here real quick. I did get out of the SOXS. That was the short chip stocks. As we saw, the chip stocks were rallying today. That was a hedge. That trade is a hedge. I told you I'm not basing this trade on the signals. I'm basing it just on when I expect the market to go down. I want to make money when it goes down. And so I'm going to get into these inverse ETFs. This will go up if the market goes down. Well, chip stocks go down, but typically chip stocks are going to move the market. So I would assume if the NASDAQ looks like it's going to go lower, then I want to make money on it going lower. But you can see here, the chip stocks rallied pretty strong, and the SOX dropped pretty sharply here. And so as long as the market is looking like it's going to rally. Now, if we get a bearish reversal candle, I'm going to be on the indexes. I'm going to be right back into this trade to hedge. This allows me to be able to stay in those other long stocks and not worry about not have to go to cash and worry that those stocks are going to collapse. I'm going to start, my account's going to start draining. Now, the flip side of doing this is that sometimes you can kind of be stuck. We're kind of been stuck in this 106, 108,000 range as the market's been whipsawing. That's fine. At least we made a little bit of money here with these, even with these whipsawing conditions. We still have done okay. So let's just, while I'm here, let's check these trends here. Here's Lockheed Martin. Down a little bit today now. We're a little bit worried about this one. Let me go to the signals here. This is moving sideways. Previous move was down. It might be getting ready to have another move down. Now this overall area looks corrective. So this looks this could just be part. We could move down the near term, maybe just down into here and then rally off of that. I think my stop is below this area right here. Double check that. So I may not even wait for it to get all the way down here, but I know I could always jump back in it again if it does start to go back up. But a little worried about the move it's making today. Northrop, although it's flashing a sell signal, it actually opened lower right here and it's trading up here. So it actually has a bullish candle. But I have got if we close below this area right here is where my stop is. And so, we're right there. We'll have to see I'll have to see tomorrow. I don't think it'll get down there today, but if tomorrow, if it gets below there, I'll probably stop out of that. But I still like I think overall, I think that these stocks are going to move higher. Now, could I just widen my stop and let it out a little bit, eventually, hopefully going higher? I could, but I chose going into the trade because of these market conditions. I was going to keep my stop pretty tight, so I'm going to kind of stick to that. Like I said, I can always jump back in it again. I don't mind getting out. I understand tax purposes. People don't like to be jumping in and out of stock trades for tax reasons, but I don't factor that in. Well, I shouldn't say I never factor that in. It's just I don't make that a strong part of my decisions because I told you early on, I ended up losing a ton of money one time because I didn't want to sell for tax reasons. And so I ended up taking these big losses. So I have tax write-offs, but you only have so much you can write off with the tax losses or with the losses from the stock. So I'm like, what am I doing? I'll gladly pay the taxes. That means you made money. Let's just focus on making money. And let the tax thing work out on its own. I can't. I just think sometimes that gets people to turn a gain into a loss simply because they don't want to pay the taxes on it. I don't think it's a very it shouldn't be a major part of your decision-making process. Let's just put it that way, in my opinion. Now, again, you could probably argue the other side on that and give me some good points, but that's just kind of how I've decided to deal with it. CAR, ticker Avis is the company. CAR is the ticker symbol. Still looks okay. My stop is right below here, but I like this. I like this bowl-shaped move. I like this bowl-shaped move. I just need this to start moving higher again here. We're getting close to the stop. And if the market starts rallying a little bit, I think that could go along with it too. It's been outperforming the market. The market's been dropping, and it's been kind of moving a little more sideways to up, so that's a good sign. Still in SARC. That's a possible bearish reversal candle, though, so I'll look at that at the end of the day. I let this one go. It was up, so I was letting this one go. But if it looks like we can maybe rally, it looks pretty strong. If we could rally at the end of the day, I'll probably get out of that one, so I don't take if it does pull back a little bit, I don't take a loss on that. But then again, at that point, I won't be hedged if we do just sell off tomorrow. But I can jump back in it again, and I might not time the market lower with it, but I should be able to offset some losses if it starts to really move. And there's a USO trade. I did have that USO trade, so that's gone up a little bit. We're still kind of in this triangle range there. Hoping we break out above it. All right, let's look at some individual stocks. Again, we'd like to try to stay in the upper range here as much as possible, although I have gone a little bit into this. I think I did one stock in business services, a couple in consumer staples. But oil and energy, there's still some good patterns in there. I think BTU, Peabody Energy, this is a coal stock. Now, the reason why you're saying, well, this one has a sell signal, it's going to go to a sell signal today. Well, what I like is that nice big uptrend, and then you've got this, what could be wave A, wave B, and you might be getting wave C right here. It opened right here. It came all the way down here, and then it came all the way back up. Now, it was looking a little bit stronger than it's faded a little bit, but it's still looking like it could close higher than where it opens. Now, this is not one you're going to get into right now anyways. You're going to wait to see if this can go back to a buy signal, which would probably need to clear this area up here to get back to that buy signal. And that'd probably tell you that's probably a correction that's done, and this thing could start to move higher again. You probably see the oil chart break out again out of that triangle range as well. So those are a couple things you could look for there, but we can add this one into the watch list. And then another one I really like in oil is this NRT, North European Oil Royalty Trust, 99 strength rank. And it looks like it's already completed that ABC pattern, and it looks like it's going to a buy signal today. So we might be able to just trade that one. I don't think I have any besides the oil, the oil ETF. I think I have any other oil trades in there. That one's nice. I like that pattern there. And then another one, I don't know if I went over this one earlier or not, but SD, Sandridge Energy, 99 strength rank. Now, you have to worry about on some of these, I think I mentioned this on Tuesday a little bit, is could this just be wave A, and this is that sucker's rally for wave B, and then we still have wave C coming down? Absolutely. But let me just show you a way that you could deal with that, because it could be that this is it. This is the correction. You're going to go higher. You are at a trend line of this uptrend. It's not very good. See if I can redraw that again. You're right at that uptrend line. Now, one way you could deal with it, you could say, okay, I'm going to get in on this buy signal. I'm going to put my stop below this low right here. because if it drops below there, then it is probably a wave C, and I want to get stopped out because wave C could maybe bring you down all the way down to here or something, and then maybe you get back in it later on. But then get in with a smaller portion, get in with a small amount, so even if it does come back down, you don't lose very much. And then if it breaks out, you add to it. You increase your position on the breakout. And that's where you get more aggressive with it. So you take a partial entry and then you add to it. Now, I don't do this in the portfolio where I'm adding to trades. I talk a little bit about that in those trading videos on the YouTube channel, different ways you can manage your trades. But I don't do it in the portfolio because it starts to become more complex. Well, wait a second, Jerry. When did you add to that position? And you sold part of your position, but you kept a white. I'm trying to keep the process as simple as I can for the classes. Believe me, there's a lot of things I do that are very complex. I mean, you want to get into option spreads that I do. I don't do a lot of them anymore because they tend to be a lot more work and not as much gain. But there's a lot of complex things that you can get into in trading, but it's not a good place to try to start that way. Keep it very simple first. But I just wanted to point that out because I saw this. I'm like, that could be wave A though. But then I thought, you know what? I've traded these before. Why not go over this in class and teach people what they could do if they still like this and they think that if they really think that oil's going higher and they don't want to miss the move that's already pulled back. Well, that's how you could manage it. You could get in on the buy signal, put a stop right below this low, and then if it does break out, that's where you get aggressive because now it tells you that was the correction. It isn't just wave A, and you could be taken off at that point. Here it breaks out and it takes off. That's what you want to try to trade. All right. Under finance, now a lot of the stocks under the finance tab right here that are at least at the top of the list under the hold section, a lot of these are ETFs. Here's the USO oil fund. You say, well, that's not a bank. Well, these are financial instruments, though. That's why they're showing up under the finance sector. Now, you can, if you are looking specifically for banks, you can. I don't know if you're aware of this, but you can, when you click on that sector tab, there you can click on this little plus sign right here, and it breaks down into subsectors. So I can go down. There's the Midwest banks. Here's major regional banks, Southwest banks. I can go find my banks if that's what I want to trade. But remember, the larger tab is just looking at all these, out of all these different subsectors, which ones have a hold signal and have a 90 plus strength rank. So we're looking at all of them in through here. So just be aware of that. And right now, a lot of the ETFs are leading the way. So I already have the oil fund. What else is doing very well overall lately? It's been commodities in general, but like wheat and soybeans and agricultural products. So here's DBC. This is a commodity index fund. Dealing with a lot of different commodities, but commodities in general have been moving. So, you can just kind of trade them all in a group basically. And this is in a nice little uptrend right here, kind of forming a little bit of a triangle formation. If it can break out above here, it could really take off. But it's get flashing a buy signal today. You could put a stop right below this low right here in case it doesn't keep going up. But this one's one to maybe, if you want to just kind of trade a commodity fund. If we go back into the finance sector here. Now, there is this one right here. Here's a specific agricultural fund, TAGS. The problem with this one, though, that I found was there's just no volume. It's a very thinly traded instrument, which means that if you're going to go buy, 500 shares, you might be one of the few people buying. You don't have any sellers. There is just not a big marketplace for the buying and selling, and you can get kind of stuck, especially when you're trying to get out. It's usually not too hard to get in, but it's really hard to get out sometimes when, especially if it starts dropping. It's going to be hard to find buyers to sell to, and so you got to be careful with some of those. That'd be with a lot of these ETFs. There's a lot of ETFs out there, but there's a lot of them also that are thinly traded, so you got to be a little bit careful with that. Here's DBA. Here's an agricultural one that I think has a little bit more. Yeah, see, this has 3.38 million volume. So you want to trade specifically agriculturals, you could trade the DBA. It has a 95 strength rank, nice uptrend. Maybe wait for it to go to a buy signal. I'm going to throw this one in the watch list here. And then under consumer staples, there's Archer Daniel Midland, ADM. Remember, that was the agricultural company there, 95 strength rank. Now this one, again, you might have to be a little bit careful of. This could be wave A. It has a pretty strong bearish reversal candle today. That could be wave A, maybe wave B, and you might get wave C first. But let's throw this one on the watch list. So if it does make that wave C, and we could be looking to jump back into this one, or jump into this one. We haven't been in it before, but we can jump in it. And then under business services here, this Paychex, PAYX, 92 strength rank. We're getting down there a little bit lower on the strength rank scale. But what I liked about this one is you had this big dip through here, bowl-shaped move. Looks like wave A, wave B, wave C. It looks like it's corrected, maybe, hopefully. And now we're just waiting to see if it can go back to that buy signal. Or you could wait to see if it breaks out, get a little bit more confirmation on it. But let's throw this one on the watch list as well. And then I'm going to go back to NRT. And let's just get in this one right here. Boy, the problem is, though, is that I'd want my stop down below this low, and that's a pretty big distance there. I could put the stop below this high and this low, maybe below that low right there. If it reverses this candle, that's not a good thing. And it's close to breaking out, it could take off on us. So this day right here, the low is 1721. So if we did 1720 as a stop, let's see if that works. I want a big position here. Let's see, 400 shares, about 7,000 a trade. Pretty small risk, $856 if I'm wrong. I'll lose if I'm wrong. All right, let's go ahead and purchase that. Let's see how that goes. Oh, that's a good point. Shoot, I'm already in it. This does have really light volume, 40,000 good that you pointed that out. I didn't catch that. Yeah, I'm going to go ahead and just reverse that and get out. Now, again, this is not actual trading with this. This is just the virtual trading with this. So this is going to allow me to get out pretty easily. And you know, there's only 400 shares too, but that's a good point. Especially if the whole group, if everyone's jumping in this thing and trying to get out of it, it can create some problems here. But I'm going to go ahead and reverse that. Sorry about that. 1993 is the current price. No, I can't be making a profit on that. So I must have had the wrong purchase price. It wasn't the current purchase price. So let me make sure that I'm not profiting on this. Actually, I'm going to just take a loss. I'll take a $136 loss on it with this, just because I don't want to eat up any more time trying to find where zero is on that. So let me go ahead and sell that. Thanks for pointing that out. I appreciate that, because so where do you want that volume to be at? I like it to be over 500,000. I love 1 million shares. 500,000. You know, if you're in the 200 to 300,000 range, it's probably okay, as long as you're not trying to buy 1,000 shares or 2,000 shares. You know, if you're trying to buy 100 or 200 shares, it's probably not that big of a deal. But it is something you want to pay attention to. All right, that's all I have. Again, we'll see what happens. Well, real quickly here, let's see what the S&P is doing. Well, we're right at the highs of the day, it looks like. So it is kind of rallying. Let's see if it rallies into the close or if it fades. That's something we'll watch for. All right. Have a great week, everyone. We'll see you on Tuesday for the next market update class. Bye now.